we're now in price discovery. So, we've now broken the all-time high. But once we get above this level over here, then there is no technical analyst in the world who can tell you where we're going, because it's completely unprecedented. If you ask me, 140, 150 on the next move, not unrealistic at all. And again, it all depends on a lot of macro factors. But for now, I think my general thesis is up. If Bitcoin did correct now and go back to about 100,000, that wouldn't surprise me. But generally, we have broken the all-time high. We're in a higher high now. So the pricing structure is very, very, very strong. Any thesis of sweeping the lows is now probably out the window in terms of a charting thesis. And so I've got to just, we've waited so long for this. Now we're here. Now we must just ride the wave and just enjoy the fruits of all the torture that we took and we took so much pain. Now we need to start to feel some gain.
Ran highlights the incredible resilience investors have shown navigating a market shaken by election uncertainties, a cooling altcoin scene, and severe liquidations earlier this year. Many were forced out, but those who stayed patient are now seeing the rewards. Bitcoin has officially entered price discovery mode, breaking past its all-time high and stepping into completely uncharted territory. Ran reminds us that in price discovery, traditional resistance levels disappear, opening the door to new possibilities. If you want to stay ahead in this evolving market, don't miss out. Hit that like button, subscribe now, and turn on notifications so you're the first to get updates like this. Got thoughts or questions? Drop them in the comments below. We love hearing from you. Every like, comment, and share boosts this channel's growth and helps us bring you even more valuable insights. Thanks for watching. Let's jump right in.
Happy all-time high day. Actually, to be honest, I have the receipts to prove it. If you go read our newsletter, we've been calling for the high on the 24th of May. So we missed it by like 2 or 3 days. But we did call for a break in the all-time high. Literally, if you follow our newsletter for the last 3 weeks, we've literally kept our conviction. We called it to the 24th of May. And we got it 2 days early. And now then, I think the big question is what happens next. I've obviously got a couple of theories as to what happens next based on what we had. But yeah, I mean, it's great. It's nothing really unexpected. Actually, if you watch the videos that I made around when the tariff FUD was peaking, I said this is something that's going to last into May. And I said if it doesn't end by May, it's going to end by August. But otherwise, I said May is my first bet. So not really surprised. I think happy. I think we deserve it. We've been through quite a lot between waiting for the election results and between a massive and very, very hard dip in the last couple of months with lots of liquidations. I actually think that I think as crypto holders, if you've held this long with conviction, well done. And now you're getting what you actually deserve. Generally, my thesis is that the price is going up. I don't really trade short term. I don't really care about the short term. Like I've been holding my Bitcoin forever and ever and ever. And so like to me, like, whether it's going to go to 114 or 115 tomorrow or the next day, doesn't really matter. I think just a couple of things that we need to note. We're now in price discovery. So, we've now broken the all-time high. When it comes to price discovery, there's very few ways to decide how high this thing can actually go. One of the things you can look at is you can look at how high it moved from the last wedge to the next wedge, right? So you look at this wedge over here, which I'll quickly just draw a line just so that you can see it. So you had that breakout over there, and you can kind of see how high we went from that breakout. We went from about 65 and we went all the way up to 108 or whatever it was, right? And that was that move over there. Now, there's no reason why this move should be less. I mean, if you look at the wedge is much steeper here, and that usually means that you're going to land up going a lot higher. There's also nothing in the way. There's no technical levels in the way. There's not no one can tell you there's a resistance and there's a support. We've never been here before. We're in hot air territory, and usually we can land up going high. So there is one little, like, if you want to call it a hurdle in the way, like, let's talk about the smallest last. This is not even really like a technical hurdle. If you plot a trend line, as you can see, I've plotted a trend line over here from 2017. If you plot a trend line up in terms of if you take this high from 2017 and then you mark it up to the top of the 2021 highs and you go up to where we are now and you carry on in that trend line, there could be a little bit of resistance at 114, 115,000. And that is for the people that don't believe that this was a clean break of price discovery, which I think it pretty much was. And so once we get above this level over here, then there is no technical analyst in the world who can tell you where we're going, because it's completely unprecedented. If you ask me, 140, 150 on the next move, not unrealistic at all. And again, it all depends on a lot of macro factors. But for now, I think my general thesis is up. We could have one little dip. I'll show you where that one little dip could come from. Let me just quickly draw a golden cross for us. Okay, so this is a plot of the moving averages, the 50 and the 200 moving average. When they cross each other on the way down, like here, then when the 50 crosses the 200 on the way down, it's known as the death cross. And when it crosses on the way up, it's called as the golden cross. Generally, the death cross, as you can see, usually means down, and the golden cross usually means up. Generally, there's a lot of exceptions in this paradigm. But if you analyze golden crosses a little bit closer, what you can see is that there was a golden cross over here. And then you can see that there was a slight dip just after the golden cross. So there was a pump into the golden cross, and then there was a slight dip just after the golden cross, right? So you can see it over there. Actually, on the way down, you can see exactly the same thing. So if you look on the way down, there was a death cross, and then just as the death cross happened, there was a pump into the death cross. You see that? So that's not unusual that as these crosses happen, you actually get a little bit of a dump. So I'll try find you another gold. Here we go. There's a good golden cross over here, and you can see that just after the golden cross, there was a slight dump. Can you see that on the chart? So we may get a slight dip just after the golden cross. It's not guaranteed, but the last couple of times, like, let me just give you an idea of here. In this here we had the golden cross, and here we pumped very high into the golden cross, and then we corrected by 9 or 10%. So if Bitcoin did correct now and go back to about 100,000, that wouldn't surprise me. But generally, we have broken the all-time high. We're in a higher high now. So the pricing structure is very, very, very strong. Any thesis of sweeping the lows is now probably out the window in terms of a charting thesis. And so I've got to just, we've waited so long for this. Now we're here. Now we must just ride the wave and just enjoy the fruits of all the torture that we took and we took so much pain. Now we need to start to feel some gain.
Further confirmation is coming from the ETH BTC chart after a long downtrend since December 2021. Ethereum has finally broken above its key resistance trendline. This is huge when Ethereum starts gaining against Bitcoin. It often signals a broader altcoin rally on the horizon. In short, Ran believes the charts are pointing to altcoins gearing up to not only follow Bitcoin's lead, but potentially outperform in the weeks ahead. Stay tuned, this could be the start of something big for altcoin investors. Let's watch more clips from the interview.
I do think up until now, this has been a Bitcoin-only cycle. You can kind of see it when you look at the Bitcoin dominance chart. If we could just call up a Bitcoin dominance chart. But I want to show you something quite interesting in the Bitcoin dominance chart. So this is the Bitcoin dominance chart. What you can see is that we were on a clear upward trend all the way from December when the markets actually crashed. We went all the way up to from 55 to 66, call it, just 65.4. Then we broke down. And when we broke down below this trend line. Now, a typical behavior on pricing when you break above or break below the trend line is what they call a retest. And if you were to pull out charting textbooks, what you'd realize is that what you had here was a breakdown below the trend line. And now we've had almost like a perfect retest, right? If you wanted to make this retest a little bit more perfect, and you add the thesis that I gave you earlier that there might be a little correction in going into the golden cross. So you might get something that looks like that, tap that, and then bang, right? So that could happen. But generally, right now, I've got to be of the thesis that alts are going to follow. Why? Because the charts are telling me that the alts are going to follow. Another good chart to look at to see if the alts are going to follow is to look at the ETH BTC chart. That's a very good chart to be looking at. So you've had a clear breakout of a long downtrend. I mean, just look at how long this downtrend is. In fact, you can probably say this downtrend is from the 12th of December 2021. You've had this breakdown. And we've just broken up above this trend line, right? So this is a massive reversal. And so, yeah, I mean, when you put those two charts, I've got to be a little bit more bullish on the alts than I am on Bitcoin. But, that said, I've also been quite wrong about, like anyone who's been in altcoins, we've all been wrong about the cycle because what I said is, when I woke up this morning and I'll actually show you this again. So I woke up this morning and I was like, I followed that pattern that I showed you of that football coach. And then I tweeted this. I said, if you were in Bitcoin, your portfolio would be at an all-time high today. Congrats. Knowing that probably no one was just 100% in Bitcoin. So I don't think it's because rates are going to drop. In fact, if anything, I want to show you something. So I want to show you two charts. If you don't mind, let me just share my screen over here. So the reason why we think Bitcoin is going up now is if you look at that chart over here. So let me quickly open a few charts for you. So this is the US, let's go to the 30-year treasury yield. This is the treasury yield in the US treasuries. What you can see is that this treasury yield is going pretty much parabolic. Like you can see it's going pretty parabolic over here. What that means is that right now, no one wants US treasuries, right? What it means is that the rates on US treasuries are going up a hell of a lot. I'm going to take you back to the weekly and I'm going to zoom out just so you can see that since 2007, we haven't had rates that are this high on the 30-year T-bill. They're going to take you to another T-bill. Let's go to JPY 40-year or JP 40-year. There we go. So this is the yield on the Japanese government bond. And I mean, that's an even scarier chart. Look at that chart over here. It's currently trading.
That's crazy.
At parabolic levels. So what does this actually mean? Let's just break it down for people who don't really know what this means. This represents the demand for government bonds. Government bonds are the mechanism which governments use to raise money and how governments use to take debt. And what you can see now is that the rates are spiking. What that means is that nobody wants to buy US government debt and Japanese government debt. And the reason why they don't want to buy it is because they believe that the US credit system is not sustainable and that the Japanese credit system are not sustainable. The real kickoff was when Moody's downgraded the United States last week. And by downgrading the United States, they highlighted the problem that probably the United States is never going to be able to pay the $37 trillion of debt. And then you look at Japan and they're saying, well, we also don't think that Japan's going to be able to pay its debt. And so now there's a problem in credit markets. Credit markets are actually imploding right now as we speak. And people are saying, we don't want to be in debt, in credit. And the reason why we don't want to be in credit is because we just don't believe that these countries will ever pay back the debt. So if you're holding this debt at the moment, people are saying, we don't want to hold it anymore. It's too risky. It's too dangerous.
Rand doesn't believe this breakout is driven by rate cuts or liquidity injections. Instead, he sees it as a flight to safety amid the unraveling traditional financial system. Investors are waking up to a harsh reality. Sovereign debt, once deemed the safest asset, is now becoming a liability. This growing fear is fueling the narrative that Bitcoin isn't just an investment, it's a vital alternative to a failing monetary system. If you find this insight valuable, please like, subscribe, and turn on notifications to stay updated with more critical market analysis. Also, don't forget to watch more videos from our channel to deepen your understanding of crypto and the financial markets. See you on next video.